Hello and welcome to yet another video of GTA Management Consultants. As a part of our continuous endeavor that we want to make the learning and habit, and we want to make sure that all the aspirants who are new to the job or who want to understand the process a bit deeper, we are starting a new series from today. In fact, we started the problem and series, and then we thought that it is always better that with the solution to every problem, why not we should also create a series that help our viewers to get more understanding on the current ways of working on a particular process. And with that intent, we have started with decoding each of the process, and our endeavor is that we are going to talk about each of the process and the sub process in detail in the coming videos. And today we have picked order to cash process. So what we are going to discuss in this presentation, we are going to have a deep look into the various sub processes of order to cash, and then we'll also have a look at some of the critical KPIs that needs to be ensured so that we can measure the success and the performance of the process, and then how a CFO who wants to have a quick check in terms of how the order to cash processes is being managed in the organization. We have also sort of come up with a dashboard that CFO can consume and confirm whether his order to cash process is working fine. So this is what we are going to cover, and our intent is that this video is useful for all those people who are learning the order to cash process, all those aspirants who are working in the process organization, and all those aspirants who want to understand business a bit deeper, all the students who are just finishing their graduation and want to step into a kind of a job. This would be very useful to them because with all the academics knowledge they have, they can consume this business understanding, and with this, they can definitely enhance their skill set. So with this, we can quickly start our discussion. So we are going to move to the next slide. Okay, so we'll just start. So what we're going to cover today is order to cash life cycle. And what is it that we have? So we are saying five zones. We'll figure out what these five zones are. Key KPIs and CFO dashboard. Okay, so these are the three areas that we are going to touch base. Five zones, key KPI and CFO dashboard. So what are these five zones? So what we have done, we have bifurcated the entire order to cash process into five zones, and that has been done with an intention so that one should have a clear clarity. And if somebody wants to learn this in a I would say phased manner, he or she can definitely learn that with this zones concept. He can absorb first zone first, then can move to the second zone, third zone, and in sequentially he can have the full understanding of the end-to-end order to cash process. So let's just look at what is first zone then. So first zone we are saying is transactional zone. This is zone one, and what all sub process of order to cash is being covered in this transactional zone. Okay, so customer master data. Why we are saying this is transactional zone is because when we are talking about the customer master data, we are actually getting a lot of information, and basis that information we create the customer master data in our system. That can be a name of the customer, the region from where he belongs, the address, the other credentials like PAN details, GST number, and other some of the useful information that is required to create an order in the system. And then definitely at the later stage, we need the details like their bank details and other details, so that we are when we are going to have any kind of dispute or when we have to issue any refund, we can do that at a particular account. So this is largely a transactional zone for us. Which other process is being covered here is credit check. This is again a transactional. Why? Because we are not doing any business here as such. We are just consuming that information to validate whether the customer who we have created in this system is credit worthy or not. And this is done by getting data from some of the sites that do this credit ratings like ICRA or S&P, wherein we could able to fetch the information for the customer, so that we are sure that the customer with whom we are dealing, uh, they are credit worthy, and we are clear that when we are creating any order in the system, there are very minimal or zero chances of our funds getting blocked and our payments are not getting realized on them. So this is the second sub process in the transactional zone. Order capture and entry. This is again largely a transaction information, because once we have the information available from the customer that he needs to place an order for a particular product and a particular quantity, he provide that information to us. So which is largely a data that is being received by us, and we use that information to key in that information in our system to create the order entry and order confirmation. So largely, if we look at the ways we are processing the information for the transactional zone is largely basis on the information that we received. We create the customer, we do the credit check, then post that we do the data entry of the order, and then finally we confirm the order. So if we look at all these parameter or all these sub processes, we find that there is a uniqueness here, and that uniqueness itself speaks about the ways of working for this particular set of the information. So transactional zone is largely data capturing, making sure that information that we receive is being consumed in a credentiable manner, and we have that information that helps us to create an order in the system. So once this phase of transactional data is covered, transactional zone is over, and then we move to the second zone. And what is that second zone? Second zone is value enablement zone. This is called the zone 2. And why we say value enablement zone? Let's see the sub processes which are covered here. Logistics and dispatch. Okay. Now, first of all, let's understand that why when we say value enablement zone, what does that mean? So value enablement zone means that we are actually, trying to deliver a value to a customer by delivering a product to them, right? And hence by delivering the product, we are sort of ensuring that we are capturing a revenue, and basis that we are ensuring that it's creating the value to the business. So all these sub processes within the value enabled zone has a direct impact on generating the value to the organization. What first is that logistics and dispatch. So once we have received the order, we have confirmed the order, we have sent that confirmation. Our next job as a part of the value enablement zone is to ensure that we have proper logistics and dispatch being made available to ensure that we are we are actually tracking the shipment date. So which means that if we have received the order on a particular date, and if our lead time is, let's say, 90 days, so we have to make sure that at the time of 80 to 85 days, once we have created the final product for them, we are absolutely ready, we are clear in terms of how we have to ship the good to which location, and if it is a multiple location, that has been clearly called out in the system itself, so that we have all the information being made available, and then we are consuming that information to set the logistics and the dispatch information in our system, so that once like order is being fulfilled, that can be easily dispatched. Shipment and tracking. So once we have stocks being made available, we have confirmed the order has been available with us, stock is available, confirmation is there, and we have confirmed that logistics and dispatch is in order. So we then move for the shipment and tracking. So ensure that the order which we have received is being shipped, and then it is being tracked to ensure that there is no mismatch in terms of the order when it is being shipped, and it is getting shipped to the right location which has been aligned with the customer. So between these two steps, let's say before logistics and dispatch, there is one more step which is fulfillment. So we have consciously kept as of now out of this order to cash, considering the fact that it is largely touch missing the costing or inventory part of it. So all those inventory and costing part of it will be covered separately in a separate series. But to make sure that we are not over confusing the order to cash series, we have consciously left the inventory part of it, which is like fulfillment, and we are assuming that that is being taken care by the separate department, which is the inventory department or the or by planning department. However, for order to cash, we have to make sure that we have a logistics dispatch being created. We have a shipment and tracking, customers notification. So once we ensure that shipment and tracking is being enabled, customer needs to be notified at a very frequent interval, because he should be absolutely clear when and where the shipment is going to come. He should have the tracking mechanism. So once goods are dispatched, or he should have the notification, and if goods are in en route, he should be informed that where are goods, by when he expects to get the delivery, and all that information. So he should be notified for each and everything, so that he can then plan his deliverables at his end. And returns handling, so this is another area. I think many times what has happened, that we end up providing all the information to our data to our customers, but we do never create a plan to returns the handling, because despite the fact that we have created the best in class product for the customer, but you never anticipate that if at all customer want to return some of the goods that has already been dispatched. So we need to have that process in place, so that once goods are returned by the customer, there should be a process basis which we can make sure that we get those product back into our inventory, and increase our stock and replenish our existing inventory with that additional stock that we have received. So value enablement zone is basically a zone that create a value for the organization. This is most important, because at the end of the day, the entire value lies when we ship the information or ship the goods to the customers. Because at this point in time, we are ensuring that once we have dispatched the good, we are in a position to generate the revenue for the organization. And all these four steps, logistics, dispatch, shipment tracking, customer notification, return handling, are key ingredients to ensure that our value enablement zone is properly handled. Now, let's just move to the third zone then, efficiency zone. And what does this zone speaks about? This is a zone 3 for us. And what does this zone 3 says? Billing trigger and validation. So why this is efficiency zone? Because once we have shipped the good, now we have to ensure that our processes are efficient enough, so that we have dispatched our goods. Now we are in a position to create an invoice and make sure that we are in a position to get the entire invoice being created without spending much of efforts, and it is being kind of a situation wherein we are doing it automatically. So it's basically an process efficiency that helps to do all the documentation that are required to realize the revenue. So first is the billing trigger and validation. So once we ship the goods, there has to be a trigger basis which the billing would be raised by the concerned department. The goods has been dispatched, it has been shipped, and now we can raise the bill. Invoice generation, a very crucial step. Largely nowadays organization, it's being something which is done through system, and in many organizations it's a system based process, but again it has to be ensured that invoice generation should be a key step, and it should not be delayed. Otherwise there can be definitely because at the end of the day, customer acknowledge the invoice once he received the invoice, and any delay in raising the invoice will delay the entire process of getting the cash completion cycle, because cash completion cycle arises once you raise the invoice, and then only we have the trigger of AR being created in our books. Tax compliance is another important aspect. So this is a very important aspect, because if we do not do the tax compliances, we end up having the concerns with the tax department, which can be a matter of the concern at the later stage as well. So all the tax compliances needs to be managed in this zone. And lastly, what it is, invoice dispatch. So finally, post all this, we are dispatching the final invoice to the customer. So efficiency zone is largely to make sure that our processes are efficient, and we could able to manage our invoicing and documentation process in a very efficient manner. Now let's move to the another zone, which is called the strategic zone, which is called the zone 4, uh, collection management. This is largely a strategic zone, because once we have shipped the goods, we have raised the invoice. Now we have to create a strategy to ensure that we collect our proceedings in a shorter span of time. We have to create a collection strategy, plan to figure out that how best we could able to get our money in the shorter span of the time, and making sure that we get all that information in the all that receivable within the agreed commercial terms. So collection management is a very, very important process because this process helps the organization to get the proceeds for the invoice or the revenue which we are supposed to collect. And if this process is not managed in a very efficient way, then there are large chances that we end up getting the funds at a very very slow pace or beyond the commercial agreed commercial term. And if we could not do the collection management properly, then our AR can also turn into a bad debts. Dispute resolution. This is another important ingredient because we assume that whatever we have done is absolutely fine, and we confirm that this is going to happen because this is nothing is going to happen. But it does not work the way it is, because customer may also raise some dispute when they have received the invoice. They have some returns. So if you look at it, they have some return handlings as well. So all those return handling needs to be taken care of. And in the case they want to have some price adjustment because of the volume discounts, all those kind of post-mortem, post-invoice has been raised, needs to be managed in this dispute resolution. And this has to be done very, very quickly because customer normally do not pay the amount till they have the final resolution to the dispute, or they tend to pay the amount by deducting a percentage of it pending the dispute resolution. So this resolution has to be done very, very quickly. Cash application. This is another aspect wherein we have to be very much sure that once we have received the fund, we have to ensure that the amount that we have received should be applied in optimal manner, and make sure that we are applying the cash well within the time, and we are not missing on any of the cash that we have received, because there are various instances wherein we have received the amount, but we have not applied it properly, leading to the open invoices, which will then be a form of the reconciliation, which is the final step here, reconciliations. And then we have to make sure that it has to be done in an amicable manner, so that our cash invoices are always settled, and if at all there is a reconciliation, that has to be done at the shortest possible time. So these are like four zones: transactional zone, value enablement zone, efficiency zone, and strategy zones, which needs to be managed in very amicable manner. But we talked about five zones, and we have only talked about four zones here, because we talked about five zones in our slide, but we have only showcased four zones. Then what is the fifth zone? What is it that we have not covered? So let's just move to the next slide and see what is that fifth zone then. Okay, so fifth zone, strategic value creation. So this is an overarching zone which talks about all the insights, analytics, and governance. So, which means that we often talk about artificial intelligence, we often talk about the data, we often talk about the automations and the other areas through which we are enabled with the data to take the decisions. And this strategic value creation. So we have strategic zone, which is like fourth zone, which is talking about the strategy for collections and making sure that we receive amount well in the time. This is the strategic value creation because this helps us to drive the next action that we need to, or it will give us insight basis which we can take the appropriate action at any stage of our order to cash cycle, starting from the when we receive the order till the final application of the cash and final write-offs or the bad debts or the reconciliation of the AR. So let's just see what are the various areas where we can apply this fifth zone, which is a strategic value creation zone, and how organization can get the best advantage out of it. So customer risk scoring. So when we do this customer risk scoring and we have that information around this area, we are in a position to ensure that the orders which we are booking for the customer, that are something which are going to be good orders, and it's not going to turn bad because the scoring is not done for the customer, and there are chances of the customers amount turns to be bad debts. Order pattern and forecast analytics. This analytics helps us to understand which are the high moving product, which are the slow moving product, and how we have tracked the orders, which orders which are coming at the very frequent pace, and how we have to make sure that we have our inventory to replenish that. So all these analytics around the order and the forecast analytics will help us to plan our inventory and making sure that we are having the right stocks available to manage our orders. Customer profitability analysis. This will help us to understand that how which customer is giving us more revenue, and then definitely we have to categorize, recategorize our customer. This is that analytics. So customer which is who's giving us larger profits, we need to definitely have to upgrade their rating, making sure that they are best served and all their queries are handled well within time. So obviously, without that, also our system should be managing all the queries within that time. But I think this will help to categorize the customer. So all those customers which are giving us high profitability can be definitely tagged as a diamond customer for the organization. Then collection strategy optimization and DSO reduction program. So all this information, once we have that information data available with us, that will help us to define and redefine our collection strategy. What steps we need to take to reduce our DSO so that we could able to convert our receivables into cash at a very quick pace. uh, Cash flow forecasting. This will help us to understand when are we receiving the months, and definitely overall KPIs governance dashboard that will help us to determine the health of the process. So fifth zone, which is the strategic value creation zone, is very important because post processing the data, if we have done one full cycle, then definitely it has some data available, and we can use that data analytics to project our future course of action. And these analytics will help the organization to plan everything in an accurate manner so that they can serve best to the customer. So having said that, let's just quickly look at all the KPIs across the various processes that we need to make sure that we should manage and ensure while managing the order to cash process. Okay, so let's just quickly have a look on all the KPIs at the sub process level. So the order management, what are the, so let's just quickly spend a couple of minutes to understand what are these KPIs. So largely KPIs are key performance indicators that will help us to guide the efficacy of the process. So when we measure these KPI, we can confirm that our process is working fine. And each sub process has a set of the KPI because each sub process is unique in itself. And the key ingredients of each process will help us to identify whether that process is running smooth or not. So when we have talked about the order management, our order entry accuracy. So order entry accuracy, order processing time, perfect order rate, order backlog, open orders, order rejection versus failure rates, customer master data. So all these are parameters which will ensure that our order management system is working fine. So if we track these 6 KPIs for order management, we can confirm that our order management system is in order. Order fulfillment. So largely this is a part of our inventory. But again, when we are talking about the overall O2C cycle, we end up covering a small portion of it as a sample here, because otherwise, if we cover the full portion of this, then it will have its own separate video for that. But again, we can quickly have a look at it on time in full OTIF, delivery orders, delivery order, delivery lead time, shipment accuracy, return rate, and the customer complaints per thousand orders. So all these are the parameters which ensure that our delivery is in order, our fulfillment is in order, and our returns are minimal, and our complaints per thousand order is at the lowest level. Billing and invoicing. So billing accuracy, no errors in the billing. Invoice processing time should be minimal. Or let's say online invoicing, or let's say online invoice trigger. It will automatic invoice being routed. So touchless process. So once the order has been delivered, automatic invoice will be triggered. Post everything is in order, and it will invoice will be triggered automatically without the human touch. So invoicing delivering timelines, e-invoicing success rate, billing discrepancies, errors, and debit credit note ratio. So all these when we compute this, that will help us to identify the efficacy at which our processes managing is getting managed. Collection, our day sales or non-staying ad, average days delinquent, CEA, collection effectiveness, all these. So like DSO, I mean, how many days our sales are outstanding, average days delinquent, for example, for how many days a particular customer is overdue. That will help us to identify what are the reasons for overdue customers, and what we can do to reduce that overdue. Collection effectiveness index. So this will let us know that what is the percentage. For example, if we have 100 rupees receivable and we have received only 90 rupees, so our collection effectiveness index is 90, right? So we need to make sure that how we can improve that. So all these are correlated in terms of our collections. Then percentage of current versus overdue receivable, aging bucket distribution, promise to pay effectiveness. So these helps us to identify the effectiveness of the collection process. Cash application percentage accuracy, unapplied cash, unidentified cash percentage, cash posting type cycle, auto application rate. and then dispute and reduction, dispute percentage, dispute resolution time, valid versus invalid dispute, reduction recovery, open reduction value, and root cause distribution. So all these KPIs are the, you know, parameters that help us to identify the effectiveness and the efficacy of each of the sub process. And if each of the sub process, if being measured across these KPI, these are like well within the defined parameters of organization. Okay. Now, when I say defined parameter of organization, what does that mean? Because there is no hard and fast rule, or there is no kind of a, a clear guidelines that what this KPI has to be, because each KPI has its definition basis the industry and basis the company in which it is managing. For example, the KPIs for a simple, let's say, DSO would be different for a industry which is in FMCG versus the industry which is in manufacturing. Likewise, the industry which is in the energy industry or energy industry which is a banking industry, there will be different methods in which it has to be calculated. So each industry will be having the whole definition, but these are like the key matrices or the key KPIs that needs to be evaluated and calculated to ensure that we are working correct and accurate in our data processing. So having said that, let's just quickly have a look at what would be the customer dashboard and what are some of the overall KPIs that we need to manage at the process level. So let's just move to the next slide and have a look at that. Okay, so we are going to cover two topics: overall KPIs and CFO dashboard here. So overall KPI. So as a part of a process, a global process owner, a person is who is the managing the process end to end, how he can establish whether his process is running fine or not. So O2C cycle time. So definitely a cycle time has been created at each of the product level and at each of the customer segmentation level. And it varies from the customer to customer, it varies from the industry to industry. But I think within that each industry, each customer has this cycle being made available, and the global process owner should have a clear visibility of that. So once they have benchmarked their O2C cycle, so they can evaluate how this O2C cycle is being managed against that benchmark to confirm whether it's going in the right direction or not. Bad debt as a percentage of the revenue, cash flow conversion, customer satisfaction, CSAT and NPS, revenue leakage percentage, and forecast accuracy. So these are like six parameters which controller for a process should make sure that he should be looking into to ensure that his process is working fine. While controller or the global process owner is largely considerate about his own process, but CFO definitely wants something more than that. And what does he want? He want 10 key KPIs to be looked into, and we want a kind of a CFO dashboard that will show us these 10 performance to ensure that the O2C as a process is working fine for a industry or for the company in which he is designated as a CFO. So DSO, collection effective index, O2C cycle time, invoice accuracy, on time full delivery, percentage overdue receivable, unapplied cash percentage, dispute rate, aging bucket run, and the bad debt. So all these information at whether at a controller level or whether CFO level will help to establish the fact that O2C as a process for that particular company is working fine, and it is not having any negative impact on my EBITDA and profits, and it is having a kind of a positive trends toward the overall health of the company. Because O2C department is one of the most critical department, because this is a revenue generating department for the company. So all the revenue is being generated by this department. So it is very critical and very close to the heart of the CFO as well, because this is this he would ensure that his top line is maintaining in a healthy shape and it's growing at all time. So with this we have come to the end of this session. Let's just move to the final thank you slide then. Okay, so we have come to the end of this session. I hope that you all the viewers must have found this session useful, and if they have any feedback, please write us in the comment section, and we'll definitely try to improve upon that. We also want any kind of suggestions and feedback, so that, and any kind of request, if you want to help us, if you want us to provide you with more information on a particular topic, do let us know. Please subscribe our channel, watch this video till the end, share this video, and like this video, and do look all the other videos which are there in our channel, so that it will give you more information on various topics that we have already covered as a part of the earlier video. So with this, thank you. I will come with another topic very soon. Goodbye.